Okay, let's move on to a topic near and dear to my heart, and I'm very sad to report this news. Let's put this up there on the screen. Bitcoin now down by almost 50% of its all-time high. And according to this, 40% of Bitcoin investors are now underwater. So it's 55% off the November peak, and 40% of the hodlers are now underwater of their investments. This is according to Glassnode. So 15% of all Bitcoin wallets fell into an unrealized loss, plunging to the 31,000 level. Now, look, I mean, it definitely tracks with the NASDAQ and with the other technology sector, but look, I just think that this is important. As somebody who is a proponent of Bitcoin, been into Bitcoin for a long time, let me just tell you that being down 50% is nothing compared to some of my losses in the past. I've been down by I think 90% at one point. So look, if you're in long enough, you've seen it all, and that's where the true diamond hands come from. But I do think it is indicative of something I was talking about earlier, which is that a lot of people who got into investing in the last 2 years on Robinhood and elsewhere, you are probably down. Almost, I mean, the data shows that unless you sold, which, is kind of especially against the ethos of Bitcoin and holding, if you actually do have diamond hands, you almost certainly lost about 100% of your gains, depending on the type of investments that you're making. And overall right now, the crypto markets are in a complete craziness that is difficult to describe. And one of them is this Terra USD stablecoin, which I'm trying to think about the best way to explain this to our audience who may not even know about it. Let's put this up there on the screen. The basics of this is that a stablecoin is a online cryptocurrency which is pegged to the value of the US dollar. And the reason why you should be able to use it is you can have this stablecoin and it allows you to quickly enter and exit different types of trades relative to other stablecoins. Now, the reason why you might even use such a stablecoin is that because you hold it, a lot of these stablecoins are paying astronomical interest rates in order for you to exchange your capital, your actual US dollars. They were paying you very, very high, in some cases like double-digit interest rates as of recently. So that was kind of a cycle, and it was a way that was a decentralized currency. This one in particular, Terra USD, which was algorithmically propped up. But Krystal, yesterday, which caused chaos in the crypto markets, the third biggest stablecoin fell as low as 69 cents, triggering a massive sell-off. Now, I will confess, until recently, I had some Terra USD, and I didn't conceive that it was possible that stablecoins could go unpegged from $1. And so obviously, I'm not gonna buy more. I don't have any right now, but part of the reason why is because these were seen as ironclad kind of within the crypto markets, and there was a big promise of the decentralized protocols and could constantly keep it pegged to $1, and this is the way that we exit from the Fed, etc. So to have this thing plunge and actually become unpegged to the dollar caused a massive sell-off both on the Anchor protocol, which is what this stablecoin is kind of propped up as, but it just shows you that the public markets are not the only places in disarray. And if anything, the private markets are even more in disarray with Bitcoin and with the stablecoin in particular.
So full disclosure, I sort of hate you right now because I spent a lot of time in my life yesterday trying to understand all of this crap.
Yeah, so I had to bring Krystal in the future. It happens. It happens. She'll thank me later.
But so there's two pieces I think that are really important here. Number one of the major arguments in favor of crypto was that it would be a hedge against inflation.
Yeah, that's true.
But that's not working out because it's just tracking with the NASDAQ.
Mm-hmm.
So
and it has for quite some time.
Yeah, so that sort of theory of the case has fallen apart. And then the theory of the case for stablecoins, in particular, these ones that are not backed by actual assets, but are supposed to maintain their pegs through these sort of like financial engineering algorithms, that has obviously completely fallen apart. And this particular stablecoin had lost its peg briefly before. It had gone down to maybe like, it's supposed to always be at $1. It had gone down to maybe 93 cents. But nothing like, 30% drop. Like what happened yesterday. And so, this is a kind of an extraordinary moment in terms of, that's why people are freaking out and panic selling, because they're realizing that the promise of this thing, the way that it was rigged up to work, is not really actually working out. And the whole promise of stablecoin is because crypto fluctuates so much, it's like, okay, well, this is a way that we can have it be a more reliable currency. And when you have the algorithmically generated peg, rather than actually backing it by some sort of hard assets, this is a way to have it decentralized, sort of like the libertarian.
Yeah, it is. Yeah.
Right. That was the promise of this coin.
Yeah.
And so the fact that it lost its peg is, a significant blow to kind of the arguments that have been made about this stablecoin and stablecoins, I think, in particular. There were also some problems with some of the ones that were supposed to be backed by US dollars. Well, it turns out they weren't really being honest about what assets they were holding. There was a whole lawsuit in New York with the Attorney General there, Letitia James. They came to a settlement. Anyway, so some of the shine is off of both crypto generally and off of stablecoins in particular. And then just in terms of the larger market picture, it makes sense that the first part of the crash would be, a collapse in some of the most speculative investments.
Right.
We covered last week how the NFT market has just completely,
like almost 80 or 90%.
Completely collapsed. The number of people active in the market and the people holding NFTs. I mean, it's just like the bottom has fallen out of that thing. And you would put that at kind of like the bleeding edge of most speculative investments. And then you would talk about, crypto alongside of these tech stocks that were dramatically inflated during the pandemic. So that's sort of like the macro picture of ultimately what's going on here. Yeah. And I think your point about the retail investors, just to bring this back, is really important because they say, the headline of that article we just put up about crypto is that 40% of Bitcoin investors are now underwater. Well, it's even worse for short-term holders who just got skin in the game in the last 6 months. I mean, those people have been devastated. They also say basically that the wallets with balances of more than 10,000 Bitcoin, they've been particularly significant disruptive force over the last few weeks, basically meaning that they are all getting out of the market. And meanwhile, the retail investors are still kind of holding the bag here. So again, they're the ones who are likely to get and already have gotten the most screwed. So as per usual, it's the little guy who is getting hurt the fastest and the hardest here.
Well, my advice, just hold fast.
Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world. So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.